Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. All right, you might remember we took a pretty big loss from our last trade, but that's just the way that goes. We're trying to make up a little bit of gain now. The following day, the market gapped way up and then ended up having a down day. That might have been a good entry, and Adam was definitely thinking about it. But he wanted to take one more day and see what might happen. So the next day, the market gapped up and went up. And Adam is going to decide to take his entry right here. You can watch that order go in live, and the order is filled. And I've got to tell you, I have no idea where this trade is going to go. Kind of like this trail at Pilot Mountain. I have no idea where it's going to go. We're just going to have to see it through and see what happens. Well, the next day, the market gapped down a little bit, but definitely moved up slightly. So this is an interesting thing. There's a couple things I'll point out. One is that the exact price we were looking to get was right at the close here on this day. And you can see that I tend to trade after markets. And so sometimes the price continues to run up and we don't get exactly the price we're looking for. So in this case, we actually got a little bit of a worse price. But luckily, the market went up a little bit. And here's a great question. What do we do? Is this the beginning of the market continuing to move up? That's a possibility. Some people might say, here are lower highs that we're hitting, and this is going to be an inflection point. That's a possibility. But those are opposite possibilities. So it's always tough to figure out what's going to happen. But here's what Adam did. He decided to go ahead and take an exit. So we can watch that trade go in live. The order goes in and the trade will be filled. And this trade is over. It's definitely an interesting one, just a short one-day swing trade. Let's head over to our tracking sheet and see how we did. Well, that trade completed on August 9th. The S&P 500 was at 532.99. Since its prior report, it had gone up 2.3%. This is a tough one because if you remember from the chart, we were actually sitting out of the market while it was going up. So we missed out quite a bit. That brings its year-to-date return up to 12.14%. It's pretty good. Again, these green bars that you're looking at, those are the highest two returns so far. So you can see that the market had peaked, back in July, hasn't fully recovered. I think that'd be completely consistent with what you see on an S&P 500 chart. We only picked up 0.5% in that one-day trade. That brings us to 7.58. We have lost some ground against the S&P 500. I think we're back to around, just a little less than 5% trailing. That's been the case. We've been going back and forth. We were ahead of it. If you look up here, we were 7 versus 4%. So we were definitely ahead of it there. Then it got back ahead of us to a couple of points. And then we started to reclaim it, 12 versus, 10. That was looking pretty good. We've just been going back and forth with the S&P 500. You can also see a couple of trades can make all the difference in the world. So, we're trailing by 2. Now we're trailing by 5. Back here a little way when we were trailing by 5, we made up a lot of ground and it got pretty close at this point. So it's a bit all over the place, but we are definitely not doing the job that we want to be doing. If we look at our key metrics, our winning trade percentage is about right at 68 versus 70. We would like to see it 70 or higher. Our beat the market factor is taking a beating. It is now down to 0.62. That could be one of the lowest points this year. Again, it could change quickly. I don't know what's going to happen. We'll have to see. You can see some historical beat the market factors. typically we want to see them at greater than 1.5. For the last 3 years that we were showing, 3 years prior, that's been the case. This has not. So, it's beginning of August here. We don't have a lot of runway to do it with, but hopefully by the end of the year, we'll see this greater than 1. That's what we're going to need to see. So you can see on our 4-year view and our current year view what our charts look like. Prior years are good, but again, this is the game we're playing each year. So we are definitely trailing the market. I know I said I would be beating the market every month, but apparently this year is a little bit different. We've been going back and forth. Sometimes we're ahead, sometimes we're not. But that's where we are. You'll have to check out our next video. By the way, it would really help me if you like these videos to like and subscribe. It really helps with the YouTube algorithm. And thanks for watching. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only. It should not be taken or interpreted as advice. Until next time.